Continue. It's you cannot stop because some of the the delegates are not here yet. So we're 1 minute away, and we'll get started here. All right. Hey, you made it, Marvin.
Hey.
I'm just saying, will he make it? Will he not? Well, it's okay. Great to meet you. All right, everyone. Thank you so much. Good afternoon. Welcome to a wonderful Thursday afternoon to the KoreSummit Webinar Series 2021. Today, it's going to be an exciting topic. If you're following our 73 webinars we're going to have in the next 3 months, this is just each webinar we have is going to be 45 minutes long with 15 minutes of Q&A. That means it gives you an opportunity to ask these thought leaders any questions you may have. And of course, there's no PowerPoint here. We're here to provide you our background information so you can learn more about the great regulations within the Jobs Act. And today, I mean, we have an exciting topic ahead of you, why everyone benefits from Regulation CF. But before we get started with everything, I want to introduce our two esteemed panelists this afternoon. I'm going to lead each one of them to introduce themselves. First of all, let's start with you, Julian, today.
Sure. Well, thanks, Oscar. And yeah, my name is Julian Phipps, Chief Revenue Officer at KoreConnex, and happy to be joining the discussion today.
Marvin?
Yes, my name is Marvin Abrinica. I'm the CEO of, and WonderFund is a Regulation CF portal in the Midwest, in Cincinnati, Ohio, in fact, but we do operate nationally. And I'm here just to talk a little bit about the benefits of using Reg CF, not only for investors, but also issuers or the companies who are offering shares.
That's great. Great way to start, Julian, Marvin. We're going to have a great discussion. So for the people that are here today, you know, to understand the benefits in many ways, I believe you need to understand the Jobs Act. So before we get started, my name is Oscar Joffrey. So I'm going to be the host here this afternoon, leading the discussions forward with our two panelists. And again, we're going to give you an opportunity to participate with questions with it. So to understand Regulation CF, as I said, we need to understand the roots of it and the Jobs Act. And it's amazing. I mean, today I really had to think about it. It's like it's been 10 years. It really has, 11 years actually. I know for most it's just getting started, but you can imagine how long it takes to get things in, you know, processed and then into the government, then approved, and then here we are. So the Jobs Act, why was it created? And once you understand that, we can dive deep into why everyone benefits. So the Jobs Act was created to democratize capital, to allow the 233 million Americans that often don't get a chance to participate. And Marvin and Julian will talk about that. Create jobs, right? So democratizing capital, giving people access to investment opportunities that quite often are denied, creating jobs for companies who often don't get access to capital, and obviously keeping the ownership to owners. I mean, after the 2008 financial crisis, we all know what happened. We saw it right firsthand. And then, of course, liquidity. So those are the pillars of the Jobs Act. And at first, you know, when it first came out, it was a question, will it work? And, you know, or won't it? And, you know, a few years later, we're now saying it is working. It's actually working so good that our regulators have given us a gift. The Regulation CF now has increased to $5 million, which I know it makes people like Marvin and Julian very happy. So let's dive into it. And I've created a kind of an outline for us today, Marvin, Julian. Obviously, we can move around it, where we can give the audience the benefits basically from all the different elements, as I indicated, the benefits to the investors, the issuers. But let's start with the funding portal, because this will be an interesting one. We're going to start it not just the traditional way, the investor, but let's start it from the funding portal. Why everybody benefits from having a funding portal as the source for getting opportunities that they need to invest. So Marvin, I'm going to put you on the hot seat right away. There you go.
Yeah, well, so first, you know, you have to think really about the whole markets in terms of who's been benefiting from investing in private deals. And so for the longest time, and this is a little bit of a history lesson, the SEC rules have prevented non-accredited investors. That means anyone who is not an angel investor. And so an angel investor is somebody who earns over $200,000 a year or has a net worth of over $1 million. Now, I don't know about you, but there aren't people out there that I know. And so, in fact, there's only 7% of the population that's out there that has that level of earning potential. And it's not like they have a sign on their chest that say, "Hey, I'm an angel investor. Come pitch me your business." And so, that's part of the challenge that a lot of companies have, is like just finding angel investors for a deal. Okay, so the real benefit for an issuer is somebody who's offering shares to a company, is to be able to put it onto a platform that gives you a broad base where you can shout out and from the mountaintop about your offering. And it all has to be done within the regulatory framework. But once you have gone through that and your platform like WonderFund, you're able to then advertise that deal in all different types of channels, including traditional channels like TV, media, newspapers, as well as new media like social media. Real benefit from an issuer standpoint is just having the ability to broadcast out broadly. And then the second thing I would say for issuers that's a really important aspect is that for issuers, especially if you're in, let's say, flyover country. And so in the Midwest of the United States, there's a big problem with capital right now. And that's if less than 22% of venture capital dollars are available for companies that are startups. If you're a woman founder or African American or Latino, less than 12% of funds go to women, Black, and Latino startups. And then if you're a small business, there are over 31 million across the US right now, and 80% of them aren't even using the banks. So where are they all getting capital from right now? And so that's the big issue. If you don't have enough money or wealth in order to start up your own business, it's a big pain point for a lot of companies that are starting. So that's where crowdfunding comes into play for issuers who are looking to raise capital. And what we say is that it's a big opportunity to level the playing field when it comes to raising capital as an issuer.
I agree. And the one key element I would say from the funding portal and is that it becomes the aggregate that can bring everyone together. I mean, that's the real benefit, where companies before would have to go to LinkedIn or Twitter on their own and people would need to kind of find it. This becomes kind of that central point. And what we're going to see in the funding portals, we're going to see different types that are going to do verticals, taking it to the level of helping the minorities groups or verticals in such areas like veggies or music or things like that. So it's the funding portal. I think it's going to be a critical element in the overall success of, it is the overall success of RegCF. Something new is emerging, but we'll get to that right away. So obviously, Julian, we at KoreConnex are dealing with the issuers all the time and the portals as partners, but mostly from the issuer's perspective. And for them, obviously, why this is important, why this is, it's critical for them when they're using it and understanding it and ongoing.
Yeah, absolutely. And we do see it every day and work with these companies. And I think, I'll pick up where Marvin left off saying, this is really leveling the playing field, and that couldn't be more true because this is the biggest reset button that we're in right now. With everything going on in the economy, this is the opportunity for startups, for new companies. RegCF was basically designed for these companies. And it's going to allow them to really have a quick pathway to being able to raise the funds that they need in order to, have a bit of a runway or that support that they need to really see and make their vision viable and their company viable. So in that respect, this is not only, going back to the original reason why this Jobs Act was created, in order to create jobs. It's really a stimulus to this economy and the time that we're in. And so the issuers see this, and I deal with this every day, and we deal with this, is that they're so, a lot of times so thankful, even just to, they've got a viable business, their business plan, they've done the homework, and they've set things up, their structure is in place, and they say, okay, how can I tap into this? And really the Reg CF is that short pathway where there's less scrutiny than the other regulations that came into effect at that same period of time. And yeah, it's generally a great opportunity for businesses to take advantage of this.
Oh, it is. And one thing that I'll share with everybody is that there's a level of transparency that becomes beneficial both for the funding portal, the issuers, and all that. So here's an example. I mean, we have real-time data right now that what happened in 2019. So as the entrepreneurs that are sitting here listening to this panel, you can sit back and say, okay, you can prove to those who are going to follow you, 1,100 companies last year raised just over $240 million. I mean, that's what happened. There were 358,000 investors that participated in that. And that is a wonderful, wonderful story that you can take to anywhere you go. Sorry, 1149 companies, 1,149. But you can take that and that stimulates you to understand why it's benefiting everyone. Every year, this keeps growing and growing and growing. In fact, the number of companies doing Regulation CF over 2019 increased by almost 62% for 2020, which is a massive, and we're anticipating now for 2021 to be even double that because of the fact that it's been increased to 5 million. So the benefits are there, but there is one particular stat I'm not going to share it yet because I'm waiting to see if Marvin or Julian can actually put into it. So we talked about the funding portal being the center point. We talked about the overall benefit to the company to utilize to tap into this regulation. Can the both of you think of another component? I put it to either of you that where this is a benefit as well for both the funding portal and the company. Just those two for now.
Yeah, I would say for the company who is trying to raise capital, it's really about maximizing for a deal right now, and especially in this past 12 months, if it's taught us anything, is that it's just getting harder and harder to reach people because everybody is now isolated because of COVID-19. And there are all these people that are out there and who've made a lot of money in this last year. Now, and don't get me wrong, there are a lot of people, there's a big disconnect right now in the economy versus where the markets are right now. And so, but those people who've had money or traditionally angel investors or ones, even savvy people, what we like to say are mid-market retail investors, somebody with a Robinhood account, if you will, those folks have made some decent money this year. The S&P was up 14% in the last month. And so people are looking to diversify their portfolios. And if you think about, like, as a startup, how would you typically go out and pitch a company? Well, you were doing it in coffee shops, and you were doing it at restaurants or over breakfast, or even in a crowd. And you can't do that right now because most major cities are locked down. And so the best way that you could reach people out there, especially these investors who are staying at home, is to stand up a deal line and then be able to broadcast out to those people virtually, just like we're using technologies right now like Zoom. Now you can do that legally by having an offering open on a platform and then doing a forum like this.
Yeah, no, I agree with that too. And it's also about like the RegCF being able to apply over and over again, right? You can do it, as many times as you need, essentially. But yeah, that's a beautiful thing. And I think, one of the statistics that I saw, there was 358,000 investors, that were active, in investing in the space last year. And so that alone shows you, that's a growing number, a growing trend, and a pool that you can obviously raise capital from. And it's there for your exploitation.
Well, it's there, but it tells you the potential. And I guess I want to just make sure that it's not so much of the ongoing, they can go back, is that the regulation gives the opportunity for a company to use it every 12 months. So
Right.
that means you can now raise up to $5 million every 12 months ongoing. So why is this important? Because we now have statistics for 2020. 42% of the companies in 2020 were return clients. So this is important for platforms. So if you help them the first time, of course, it makes sense. So again, it becomes the center point. That's what I'm saying. We need to, the data provides us great information to understand what the number of investors provide us, the 358,000 that did invest. That's a great stat. But if you take it up against what the market potential is, 233 million, what does that tell you? We have a lot of work to do to get the rest, because there's still so much room. And to Marvin's point, there's a lot of people that made money. So we need to find those roots and work it through. So I'll never forget the first year, I think it was a total of maybe 15,000 investors. Look at that. We went from 15,000 to 358,000. And next year will be almost over 1 million. I'm very certain we will have over 1 million. And every year that keeps growing. What does that mean? That means it's spreading out. People know about it. And it's going to be a great thing for all of us, because the funding portals will be successful. Companies will be able to gain access to capital. So, all right. So we've talked about, the issuer, the company, and the benefits to them, the funding portal, and of course. But now let's talk about the investors. I mean, we've touched on it a little bit. Some of the points you brought in there, Marvin, regarding the opportunities having. They've made money, but what is the true benefit of them getting involved with crowdfunding? And keeping in mind what the Jobs Act promised, right? Democratization of capital, the ability to create jobs, keeping the ownership to invest, the owners, and of course, liquidity. How does that benefit an investor with all those points?
Yeah, it's a great question. I think one thing that investors are very much, they're very choiceful right now, which means that it is a buyer's market for investors. And it's no secret that this past year has contributed to that. It's harder to raise capital as a company, and your valuations and so forth have been challenged and depressed in many ways because of the buyer's market. And what's happening is that there are a lot of investors that are out there looking for deals. And there's this interesting stat from the American Capital Association that says that 1 in 5 angel investors are now using RegCF or Reg A Plus or any of the other public regulations like Reg D 506C. And what's interesting is that it's not that they don't have access to deals already, because I'm sure they're getting good deals. It's more so they can now access even more deals, high quality deals, but then they're also able to enter in with a very low buy-in or a ticket price. Okay. And so this is important, because what we found in our operations is that angel investors will tend to dip their toes into a company just to see how that company is going to, how they're going to go about raising capital in that very public window of 3 to 6 months that they're open, their offering is open. And what they're doing there is they're just getting their feet wet so that they can see if that company is able to raise more money, then they're going to double down into it. And that's what you're talking about, some of these repeat investors. And so that's happening on an individual level, but it's also happening on an aggregate level on a macro level, because what typically happens is where the money flows, and when the crowd starts seeing the success of a fundraise, more and more people start wanting to jump on board because of this whole FOMO effect that my kids like to say. And that's it happens with investors too. So, we're seeing that happen right now, and the benefit for investor diversification into alternative share classes that they either hadn't had that opportunity to buy in at such a low amount, or if you're new to the game, this gives you a new way to act like a big shark when you're still growing as an investor.
Great point. Julian, I leave it to you.
Yeah, I would say essentially also from transparency, I guess, standpoint, fund the aspect that with RegCF you can work with a funding portal. You can work with the only other I guess authorized party would be the broker dealer. So from those two standpoints, when you're raising capital, you have the option to use and be able to leverage the experience of funding portals and in terms of getting everything, set up correctly. And the same for broker dealer. The broker dealer would be doing it directly from their site. And so, that's an important, I guess, distinction on how to go about and where these fundraising opportunities will live, right? Where they'll actually have a presence. So it's about, leveraging what is existing in the marketplace and what services you can lean on. Because let's face it, some of the startups and early stage companies will need to do that. This is not their familiarity, and so that's where I believe that these different services are being provided come really to the forefront. The other factor for investors, I would say as well, is that the investors can be incentivized through RegCF as well. And so for that, what does that mean? They can get perks. So I've seen creative ways, and we've seen creative ways that companies are incentivizing investors. Perhaps it's first in line for a product. Perhaps it is, a nice sweetener in terms of what they will get out of, being able to name a certain product line. So there's a whole bunch of creative ways that really play into the, I guess, perhaps sometimes ego of the investor, or even just the bragging rights that, hey, I'm in early on this company. It's a great opportunity, and maybe not even necessarily about so much as the return aspect, but it is also that emotional connection. So those are just a few thoughts that I've seen in terms of the investor standpoint as well.
No, those are great. Incentivization is a game changer, right? So depending what kind of company you have, you may have some retail products, and that it's another great benefit. The funding portal providing the transparency, the multiple effect of coming back. Another thing that I see personally is that the professionals, there are companies out there providing independent, reports that can certify a company. There's a particular law firm called CrowdCheck that owns CrowdCheck, and the CrowdCheck report is a standard. It's the gold standard in the RegCF world. And when a company provides it to the investor, it knows that it's got all these different elements. So it's really, that gives the confidence, that gives that badge, and the investor keeps benefiting. But my favorite one of all, for me personally, because I've been writing about this for almost 10 years, 11 years, is that they're not shareholders anymore. I personally don't believe that investors are shareholders anymore. And if we take that path, we're heading down the same path of the publicly listed world. That's where I came from. That world was, I get my money and I do whatever, and who cares about the shareholders or the investors? I'll report to them every quarter and they'll be happy, and so on. It can't happen here. These individuals will sit on your cap table. You will see John Smith, your Marvin, Julie, everybody. So all that. And so the companies that are successful at it will work towards, like we've done, we call our shareholders gladiators. There are some that call it equity punks, legionnaires. Why? Because they're here in a journey. It's a journey that you're taking on. So we have to look at this as a bigger picture than just, getting the money. David Weil, the father of the Jobs Act, has always reminded me, always, to this day, that it's never been an issue of the money. The money's there. Marvin, you said it. The money's there. People are making it. Some days you don't make it, but somebody else is. You know what it's like. It's just going one pocket to that. But money is there. Make no mistake. So the real question is, we need to motivate that money to come here. And it can't be you can't compete with the public markets. Because if you're competing with that, you might as well go that route. Privates are different. It's a journey. You're selling the story to an individual to participate. Marvin said it. His kids remind him of FOMO, fear of missing out, right? So that's a great point. So if you have all of that, you need to cultivate within your company what the journey really is all about. You're building something, okay? And yes, people will make money, of course, but it doesn't need to be an adversarial relationship company, shareholders, and we will report to you. No, it needs to be something more glorified. There is one company in particular that I'm so proud of, because when they read my book 10 plus years ago, and they had embraced it. Today they have hundreds of thousands of shareholders, a privately held company that went worth $1 million. It's now worth over 1.4 billion pounds and more, has raised over $130 million from the crowd, and it calls their shareholders punks. I mean, that's,
Yeah.
and everything about them is they're ambassadors.
Mm-hmm.
See, ambassadors. They treat them like customers, ambassadors. So imagine all for yourself. So why is the great benefit overall? These are customers. These are people that bought into your business. They bought into what you're doing, and they're going to go out and tell two friends and two and so on about your great company. Isn't that the most wonderful viral effect you could ever have? So to me, this has been the one model that we've been trying to show, and it's finally coming to fruition, because those who follow it exactly to the T, as we're saying today, succeed over and over and over. Those who treat it like the old days of raising capital, you will get into a stump, meaning that you take their money and then you report to them every quarter. You've really missed out on the opportunity that these people can do more. I'm going to share one more story with you before we go to the next question. That is, when I first wrote about it, it's an article, it's a blog that I wrote. It's called, shareholders equals customers equals ambassadors. And I was asked in a panel by venture capital, why on earth would I ever put money in a company with 5,000 shareholders? And I go, I'm stumbled. I really am stumbled by your question. It goes, why? Well, because the very first question you ask as a venture capitalist is how many customers the company has. I'm bringing you 5,000 customers. They happen to invest. Isn't that the most wonderful thing? They're in. Not only they bought the product or the service or the solution, they're in both ways. And not only that, imagine having 5,000, people that will be your brand ambassadors. You pay companies to go out there to promote your offering, to promote your products, and you pay hundreds of thousands of dollars. These people paid you so they can go out and promote you. It is the most wonderful experience. If you do it right, it's explosive from the perspective that it changes the way, the whole philosophy around crowdfunding and the way you put your journey towards your company. So I don't know if you've experienced that yet, Marv. I mean, I'm curious to hear if you've gone through that yet.
No, it's a great experience. It's a great feeling too. And I've not only started this company to help others do it, but I've also raised capital using crowdfunding too. And so you talked about the punks, and I assume that you're talking about BrewDog and that brewery who calls their investors brew punks. And so I actually started a brewery in Cincinnati, Ohio, and we used crowdfunding as the mechanism. And we raised over $900,000 doing that from 150 investors. 40% of those investors were people of color, which is unheard of because I'm Filipino and my co-founder in that is Black. And so, the opportunity was there for everybody to participate. And so we had a tremendous amount of people came out of the woodwork to support it. And and call them the enlightened few is how we call them, so because they understand what we're doing. And so, I always encourage our clients now who are raising capital is really starting to touch upon those investors and activating those customers, because they are dual-hatted, as you had pointed out, Oscar. Those people are natural resources for the company to help, even during a pandemic like this. They can continue to support you because they have a vested interest. But then also beyond pandemic, they get the benefits and rewards of being an investor. And it's all about shareholder relations. And, at the end of the day, that's exactly what you're doing.
Yeah, you bet. I think it's you can't overlook that part. You still got to do it. But if you can empower them, make them part of your company, you have an entire sales force, brand ambassadors, influencers, influencers. I mean, that's one of my biggest ones that, you get companies coming at you. Oh, we have influencers that, for a tweet, 25,000. I'm going, wait a minute, I got 30,000 people here. I give them that, they'll do it. And it's going to be more real. Do you see what I mean? It's real to everyone. I want to move into the next item in the benefits of Regulation CF, and it's one that we kind of talk about it. I know it's very dear to David Weil. Again, the father of the Jobs Act, the former vice chairman of NASDAQ, for all of you that are here today. One of the things that he's working on is the next version of the Jobs Act, and Marvin is right on it. And that is, we've discovered that minorities are really the ones benefiting from crowdfunding. And obviously, you're Filipino, I'm a Latino. In fact, all three of us here, we are we are the new face, right? We're a mix of everything, and you're right. It is sometimes our hurdles, sometimes even harder at times, and crowdfunding is going to make it work. So I obviously love to hear your thoughts on that, Marvin. You've touched on it a little bit of your background being Filipino and your partners. What is your funding portal doing specifically to address that component of it?
Yeah, well, for one, we do have an opportunity for minority businesses who are looking for capital. We actively search for minority-owned businesses, women-owned businesses, people of color, as well as LGBTQ companies who are raising capital. One, because these are traditionally underserved. I think I shared some of the data about how underserved they are. And then number two, a lot of these individuals are ones who just don't have the same resources as majority population. And what I mean by that is there is a term that we like to call internally, it's called the valley of death, if you will. And so every startup can usually come to the table with a little bit of pocket change, if you will, or some money that they can contribute to their startup. Now, disproportionately, people of color and women are less likely to start a new business because they don't have those natural resources. And so usually if somebody does have those, it's enough for them to bridge it until they get to some kind of private round, an angel round, or a VC round. But because of natural biases that are occurring, okay, good, bad, or indifferent, they just are, then they don't always get the audience of the ones who control the money. And so that's where we talked about leveling the playing field. Part of the opportunity here and part of the reason why we exist, we like to say that we like to fund Main Street, and we like to make sure that we are funding the dreamers. And so with that, the part of the opportunity here is to broadcast broadly and advertise broadly these deals that these minority business owners have, so that everybody can participate in them. And that level of reach is something that you just can't do. You can't syndicate that on a private level.
No, and I agree. My personal belief right now is that crowdfunding is the equalizer for everyone. It's the equal. I mean, and now with COVID-19, it's the skill set. Do you have the ability? Do you know how to use the tools and how to engage and then bring a crowd together? And I firmly believe we're going to see a greater number of entrepreneurs. I've already spoken to a number of accelerated programs that are actually emphasizing, people, Latinos, Blacks, Hispanics, Filipinos, Asian, they're really making sure that everyone understands the basics. And that's really what it is. It's not because we do need to make one thing clear. There are entrepreneurs coming from these regions. There's great companies coming in Brazil, Chile, Mexico, Peru, Venezuela, in Asia, in the Philippines, that exists. So the question is, why is it that when they come here, they feel because we're all immigrants, right? We're new to the country, and we have to work our way where if you in that nation, where you came from, it's a different start. So we do need to make sure that we have a clear that it's not saying that this is an issue everywhere. Opening it up, U.S. has done something amazing, totally amazing. There's been no other country in the world that has opened up the market as they have to 233 million Americans the way they have. I mean, with Regulation CF 5 million, Regulation A plus 75 million. I mean, these are big changes. So, and minorities, I feel, are there's a driver there they have, and I personally think that in 2021 we're going to see more of it, and front and center of it, in particular women leading on. In fact, I know we've seen it. We can tell you statistically speaking, women CEOs are much better at administering their companies when it comes to large crowds than males. That's there's statistically, we know that they nurture the crowd differently than male CEOs in the early stages. As it grows, we know that women have a harder time getting to their next stage of funding, where the male gets it easy. This, I believe, RegCF is going to balance it all out. There's now, before they were able to, minorities could get $500,000 to $1 million, and then hard stop, right? It's like, not anymore. Now you can go to 5. You've now gone to your Series A. Like you can do a lot with 5 million, and you can come back again 12 months later and raise another. And then if you get really big enough, you raise up to 75 with your Reg A. So Julian, sorry, I didn't mean to not give you an opportunity to participate in this part of it. It's obviously dear to me personally, but I'd love to hear your thoughts on this.
Yeah, absolutely. I mean, you guys, I'm going to probably echo some of the things that you've both mentioned, but yeah, this space is really, I guess, tailor-made in that sense, just to really offer the opportunity where there wouldn't necessarily be, that pathway initially. And really, you mentioned, it's opening up to a variety of different individuals and different people from all walks of life, and that's the beauty. And I think part of that is what we're doing today is really educating on how to access these different tools, essentially, in order to propel their ideas to come to fruition. And so that's really powerful. And really, I guess, the other aspect that while we were having this conversation that's really interesting is we're seeing a lot of companies also set up different funds for accessibility and to support under privileged, perhaps different groups, and give that accessibility to funding. And wouldn't it be amazing for funding portals, much like Marvin and whatnot and others that exist in the marketplace, if some of those could be perhaps challenged to steward some of those funds into these portals that have the first eye at which ones are successful. Maybe there's dollar for dollar matching, or maybe there's different ways that we can then even increase the opportunity of success. But I mean, these are thoughts that have just thought about, but I'd be interested to hear your thoughts on this as well.
Yeah, look, the overall benefits were obviously the way capital was raised up until the Jobs Act was really, it was the angel groups, venture capital, and that was it. I mean, the accelerators were really the VC route, some angel groups, not too much. This really opened it up to the rest. I mean, we keep talking about the democratizing capital to the 233 million Americans that can invest. What we really haven't also tapped into is we've democratized the access to the companies that often don't get to there. And that's I think that's even a bigger picture, and that includes the entrepreneur who is a minority, who didn't think it was possible, or was able to get this far but wasn't able to get to the rest. I think personally, I believe all of these balances are coming out. Everybody's starting to see the world differently. I wrote an article on December 31 of this year. I call it the reset. I've been talking about it for about 6 months prior, and I firmly believe, I know for most of you, you're a bit young, but it's like 1999, December 31. It's this reset that we're having now is one that we've needed for a long time. We've been stagnant in technology. Yes, we've been introducing new tech and stuff like that, but business has remained basically the same. We needed this. So what does that mean? Well, look how we're transacting today. We're transacting via video Zoom. I don't use this device anymore for anything other than to watch maybe my news, but I don't get phone calls in it anymore. It doesn't serve any purpose for that at the moment, and it probably won't. I mean, we're going to be with COVID-19 for at least another year and a half before we're in office. So everything's changing the way, and people are no longer afraid to have people, distributed. We're not using remote. See, it's the same philosophy, and that's going to change. My team is in different countries all over the world: Brazil, India, UAE, Australia, Canada, USA, UK. That's exciting, right? And that changes the dynamic of how you see everything going forward. So obviously, I bought into the Jobs Act um, 2.5 years before it was enacted. And I bought because I came as a minority. So I understood what it means to democratize. My enthusiasm today is the same one I had over 11 years ago. It's still the same excitement, and it's just getting started. So for those who are journeying in today, it's exciting because, I'll never forget the first time somebody said we raised 50,000. Oh my goodness, it was just right. And now we say 50,000 like if it was yeah, it can be done. It still worked. We still need to have the funding portal that what Marvin has, and we need to make sure we have everybody playing in the sandbox. But my last part that I'm going to bring on, and I'm going to talk with everyone, the benefits, obviously, why everyone benefits. We haven't talked about all the other participants. So we've talked about the investor who's the shareholder, the ambassador. We talked about the company, the funding portal, and all that. But as well, there's a whole community crowd that's supporting this to make it happen. The lawyers, the auditors, the investor acquisition, the marketing media that are also part of it. They can't just be coming in to be the transaction based. And I don't know how you work with them, Marvin. I'd be curious to hear, have you engaged with them to bring them into part of that whole ecosystem of crowding and getting involved in these opportunities?
Yeah, absolutely. At the end of the day, as a portal, we not only just facilitate as a nexus point for investors and for issuers, but there's a host of services that are required on a startup's journey. So I think you had mentioned that before, that it's like you're all on a journey together. And part of that is there's some certain professional services, including tax as well as legal services and compliance that's important to do a fundraise. And some companies get that through accelerator programs. They might get some pro bono help here or there. Maybe a small business development corps supports them. But for a lot of these startups and a lot of new companies to this game, they don't understand all the details as to what it takes to raise capital. And so part of that journey is we have to be a source or a resource of education from our side in coaching these companies in order to stand up a deal, but then also directing them to the right resources who could do it. And then beyond that, after you raise capital, I mean, that's even before you even hit go on a capital raise. Then there's the process of raising capital itself, which is very much a marketing exercise. My background is in brand building. I worked at Procter & Gamble for many years, running several of our multi-million-dollar brands there. And part of the effort there is really on a consumer level. You're just trying to reach as many people as you can with a good product, with a level of frequency that's going to convert those people into buying it. And ultimately, that's what's happening in this investment world, is that you're reaching a whole bunch of people and you're trying to get them to see the deal. And you're trying to convert them into investment. I mean, that's really how the name of the game goes with this. And that's a whole nother process that needs to happen. And then the last side of it is where companies like yourself with KoreConnex is there's a compliance standpoint that needs to be managed on the back end. And that's really the shareholder relationship standpoint, how those cap tables are managed, everything from, how many shares. You had mentioned all those little investors that are part of deals anymore. That's all getting cleaned up now because of these special purpose vehicles that are happening right now, which was another advent of the new, we like to say crowdfunding 2.0. That whole SPV now, if there's any investor that complains about having small investors on a cap table, that's not even an issue anymore. And it shouldn't have been in the first place because of the tools that, transfer agents are able to manage. But, now all that stuff's taken care of with these special purpose vehicles. And all it does ultimately is it smooths that journey, if you will, and there are guides through that journey to raise capital, manage the investors, and ensure that you're keeping your fiduciary duty as a startup who's raised money from people.
No, I agree, and it's one of the things that people hopefully here the benefits are so far reaching in different areas and getting all that ecosystem together, everybody working together. So we're down to the part where obviously we like to ask you if you have some questions for Marvin or for Julian or myself or as a whole. Please just click on raise hand and we'll be more than happy to answer your questions. All of this information will be available on the KoreSummit site. You'll be getting emails about that. So our goal is really to keep that education movement going. And none of this means that you don't work with your professionals or anything like that. All right, Michael, Shane, come on in and ask your question. You need to unmute yourself to speak.
I just want to say how fantastic. I've watched 4 of these, and you really are shedding like an incredible amount of light. Your guests are great, but you are really particularly good and so experienced, and you are just on the ground floor. And you know, I heard like the flyover countries, states, 22%. I mean, how do you get this to the manufacturing base in the flyover states? Because this kind of money in U.S. manufacturing, you know, could ignite an incredible revolution here. So, you know, you guys know how to think about that. How do you really get down to the bowels of America with this program? And then you really can create this incredible change here.
Great question, Michael. Marvin, I'll leave to you.
Yeah, thanks for your question there. You know, I think I couldn't agree with you more that flyover country or the Midwestern states has a lot of unlocked or untapped potential when it comes to capital. The mindset is very different here in the Midwest. You know, having grown up in the Midwest, but also traveled quite broadly, you know, it's just very different from the freewheeling loose spenders and venture capitalists on the East and West Coast. So you're dealing with a lot of people of legacy money, of people, they like to say old money, coming from a very Rust Belt type of mentality, had to earn every single dollar. And it can be really tight for these folks to start investing into companies. So I think number one, a part of the opportunity there is really, really strong deals. Ultimately, you know, money will flow to good deals, and investors are pretty savvy. They know a good deal when they see it, and they also know a bad deal when they see it. And so they won't touch bad deals. But if there are great, high quality Midwest, and I'm not just talking about tech companies, I'm talking, like we like to say, yield driven or yield bearing companies or growth opportunities there. You know, these are investments that from a private equity standpoint have some kind of return on it, some kind of preferred equity to it, where there's a liquidity or an income stream that comes back to these individuals. And so, you know, those are the type of companies that we've seen a lot of investors come out of the woodwork for in the Midwest, specifically companies, because they're just used, those investors are just used to investing in deals that are like that.
Thank you, Marvin. Michael, and thank you again for your, it looks like he's got another person there. Let's give him
more point here.
There you are, Michael.
Can you hear me?
We can hear you. Yeah.
So you know, the Midwest is really the strength of the country. You know, a major strength of the country in many ways. You know, there's such decent people. They're so hardworking, and you know, to get capital there would be incredible. But the other thing you said was about women. You know, and how, you know, I couldn't agree with that more. You know, they're nurturing, they're loving, they come from the ground. They're going to, you know, especially, you know, you want to really take care of shareholders, you know, not as investors. So the idea of promoting whether the women start the businesses or whether they're recruited to run the businesses as like the chief operating officers or whatever, you know, it's just, I think it's a critical component.
I agreed, Michael. Thank you for that. And we're going to see more of that. And I think that's one thing about this industry is that we're going to see information. I mean, look what we're sharing with you today. You know, 5 years ago, we couldn't share the data that we gave you today. that 1,149 companies raised X number of money from X number of investors, what the average investment was, and everything. That's so powerful. That motivates you, and that will help whether it's Mid-America, and it's broken down by sectors. We got it by sectors. We got it by regions where the investors are coming from and all that. And it's only going to get better and better. And it is going to help all of America. I mean, that's the most important thing everybody want. Your takeaway for today is the following: regardless of everything that's been going on politically and of course with COVID-19, America has stepped up. I mean, stepped up majorly. Online investing for Reg A, RegCF, and 506Cs is at a 280% increase over last year. That tells you something. People did not walk away. They kept coming back and they're investing in companies that are there to create jobs. So that was the final piece. The final piece is the jobs that are being created that are creating and keeping people employed. And more importantly, not just employed, but being part of a journey of an owner who is going to have that gratification of having that ownership, keeping it, but with a responsibility that comes with it. And so, that's one of the talks we're going to have. You've been given a gift for those CEOs. You've been given the gift to raise money under your terms. Don't forget that. And that comes with responsibility. That before it was you got the money, that was taken away from you. You didn't want that. Okay, now the regulators are giving it to you. And what that means is that you have the responsibility to do what's right. And they're going to give you the playbook, but you still got to do it. And if you do it right, you will be rewarded. Nobody will question the valuation of how much you control of it. They will question your actions and what you do in that journey coming out. Looks like Michael's coming back again. We should just leave him there because it looks like he's got a lot of good questions.
Last one. Thank you. I really appreciate it, Oscar. I know the Zoom is convenient and COVID, which is going to be over soon. It'll be like an accident in the rearview mirror. Everybody will get started again. But Oscar, you really should think about how to take this to the business schools. Do one-day seminars in the business schools, start courses. That's really where you ignite it. Because every year you got those kids coming out of business school. And if they have this stuff, if 1 out of 10 or 1 out of 20 turns out to be an entrepreneur and they can raise money like this, it'll spread like wildfire. And the last thing is, because there's a great futurist that said in the 70s, actually, there's enough since Watson and Crick discovered DNA, there's enough information in the world to solve any problem. So you, Oscar, can really lead the way to solving so many problems, but you got to reach the people, right? And Zoom is great, and these seminars are great, and I'm really appreciative and grateful to be able to watch it, but you got to hit the ground. It's like you can't run for president unless you're ready to start in Iowa, right, and shake the hands. You got to do the same thing.
Did I say presidente? No.
but you can really ignite this in even a bigger way than is imaginable. I mean, you're really onto it.
Appreciate it, Michael. Thank you. And it really, you know what? I always see it as a starting point, and you brought up a good point for all of us, Marvin, all of us. Our ecosystem right now at CoreConnect exists of 850 partners in 23 countries. We're very proud of that, empowering everybody. And I'm a strong believer in education. For that reason, that's why we give away our books. The books that you're going to get from me that I wrote, and I've co-written with many of the colleagues, including people like Marvin and others over the years, they're for you as entrepreneurs, the ecosystem, everyone to learn. So on that note, I just want to say thank you, Michael, for your comments, your questions, and Marvin, Julian, thank you again today. Looking forward to keeping the momentum going. Let's have an amazing 2021. Look forward to seeing everyone at the next KoreSummit Webinar Series 2021 coming up next Tuesday. And of course, Tuesdays and Thursdays. Now you're getting in 2 webinars per day. And this will go all the way down till beginning of April. And it will be a combination of RegCF, Reg A Plus, and 506E. So have a great week and a great weekend, and we'll be